All right, stock market analysis. This is the final phase of what we do here in this show. My projections, before we get to that, please do read this important slide. It tells you about our approach to analysis and what that means for you as you apply our work, and the important concept of trade ownership. No matter where you get the information from, no matter what sense you get for how you and why you want to enter a trade, or how and why you want to exit a trade, it has to be your own decisions. If not, then you're going to be depending on other people. Your skills will not develop, and you will certainly get stuck in losing trades for a longer time frame than you want to do that. So please do read this slide. And one more reminder, Matt said earlier in the show, we have a workshop coming this Tuesday, May 21st at 2 p.m. Eastern Time. It's over 3 hours in length. You're going to get a view of how I approach the analysis in the futures and indexes as I share my step-by-step thought process. I just simply speak out loud on everything that I normally do when I do these charts every single week, and then post them for our members, but you get to watch me do it. It's going to be grain, softs, cryptos, interest rates, treasuries, currencies, metals, energy, stock market indexes, and the VIX. I'll do a few monthlies depending on if they're important to that analysis. So you'll see some monthly analysis, weekly and daily, over 50 charts that I'm going to bring. And there's several different prices for this, ranging from $295 for a level 4 members and workshop members, up to $495 for people that are not members at all, and then a recurring price that's only at $79. So if you take this in, it's your ticket in to come to behind the cycle analysis curtain workshops that we do about every couple of months. And that will be the way that you can really learn the way that I do analysis. So please do write to Matt at askSlim.com for that pricing and sign up links. And we hope to see you there on Tuesday. Stock market analysis, multiple time frame analysis and projections, S&P 500 weekly and daily, with our proprietary indicators. Plus, I'll take a peek at the market condition monitor. Matt did a great job at looking at the market condition monitor earlier in the show, looking at a lot of different stocks and ETFs and stuff. So I'm only going to show you the stock market right now, not look at anything else in there. And if you want to see more things about the MCM, please go watch that section that Matt brought on our special level 4 membership with a great demo on the market condition monitor. So let's look at the S&P 500. This is the weekly chart of the S&P 500. Now, without a doubt, we said very clearly that what we thought was that the market was going to have a corrective period here of 5.3% to 8% on the downside. It was 5.9%. At the lows. We believed that this low was not going to be the low, and it would be moving to the upside and then down again one more time into late May. That was our projection, but the market changed, and it was much stronger as it was being pushed up by even longer energies that come out of the monthly chart, and I'll show that in behind the curtain if you come to that workshop. So this is revised. We thought that June, July, it said June, July here before, was going to be the period of strength. But now, clearly, it's May, June, July, as we think the markets will continue to move up. Actually, if it moves up into this June, July period right here, then likely that the minor cycle will bring some modest correction in this period here and then up again. So you could get the strength of this market up into the fall. As late as that, before it then goes into probably a Q4 correction based on what we see here. Our upside projections, even before this market turned up, were that it was going to get up into these levels. So 5,400, that's 54.43, this level right over here, 55.37. These are the monthly extensions, 55.65. So 5,400 to 55.50 is the reasonable upside projection for this market. Now, it's important to note that when the stock market had its major peak, back into end of 21, the market capped GDP, the valuation of the market was 199%. Now, economy grew, earnings grew, and when that happens, those numbers get adjusted. So when you get up here into these areas of around 5,500 or so, you're going to be at over a 200% to GDP. That will be the highest valuation for the stock market ever. And that is very likely to bring a very sharp pullback after this rally. You don't see that projection in here right now because I have no reason to give that projection now because this is positive. Notice in here the reversal scalp turning up. When it does that, that is what confirms that the cycle low is in place. It turned up right over here on that week right there. And that just as it did right over here, it did right over here, you get into the rising phases in this cycle. So in other words, this is going up, this is rising phase in the minor cycle going up. I don't have an anchor point in here yet, so I can't really put in any supports. All we know is that we're likely to continue to get higher prices with the market conditions as strong as they are right now. So that's a lot of strength there. Here we see the revised upside channels on the short term. We kind of call this the slim cloud that we build in here, where it gives us a sense for the strength and weakness in the market. And when you get up into having to give it up into the higher channel up here, you really know the market is very strong. So on the bottom in here, what you see is the option bias study. And it was bullish all in here up until about this point. Then it said right here at this point, it's not bullish anymore. And you would start to worry about moving to the downside as this got negative. Now, right over here, it turned neutral and then it turned bullish again. So this was the first indicator that we looked at that said, well, the market is changing and it's likely more positive. So that's what we're looking at are conditions that are much more positive based on the option biased indicator, the OBI. So again, this is saying to us, and it was saying to us over the last week, things have changed. So what's going to happen is that it's likely you're going to get some corrective period in here. Maybe that's the next few days. Sometime between, we thought end of May and early June was the potential for the correction. It's still the same timing that we were looking at. It's just that it's the magnitude of the advance and the length of the advance based on cycle theory changes where the correction is likely to go to. So if the market would have actually made its peak where we expected somewhere in this resistance zone and then turned down, it would have likely tested this level and come down. But once it gets through this repair level, we had it right in there. Once it gets through there, we said it's clear that things had changed and the market much more positive. So that's what we see here on the daily chart. So weekly, again, this turned up positive, this corrective period right there. Over, we enter into the period of strength, which is likely to go out into Q3 with probably some dip out over here in the summer. That's what that looks like. You have this very powerful pattern right in here with OBI, the option bias indicator, telling you to bias your option positions to the long side, just as it did through this whole long period right over there. And when I move to the momentum condition right over here on May 6th, is where the momentum condition turned bullish. So that was 11 calendar days ago that we got the next warning, or maybe that was earlier than the OBI, that said things had changed, and we were respectful of that. And here's your 2-hour chart in here, and on the bottom is the askSlim market condition indicator. This is a very unique indicator in that when it is trading under the minus 25 level, which is right here, it's negative and it crosses into there and it gives us a warning that it's testing. This is if the market was still negative and there were longer forces pushing to the downside, it would tell us that it was bad and it would move back under the minus 25. Once it crosses over the positive 25, it then tells us it's a positive or bullish signal. When you look at the slim ribbon PO here on the 2-hour chart, all of these bullish signals were telling us with the market condition indicator and the slim ribbon and the slim ribbon PO positive and these upside momentum signals, it was telling us positive things. So for all of you people out there that may be watching this and saying, well, Slim, you said it was going to go down. Well, we also adjusted based on all of our indicators and getting through that important level right over here on the weekly chart, right there. I'm sorry, on the daily chart right over here, that repair level 5201, that told us positive here on the market condition indicator, positive right over here on momentum, positive right over here on the 2-hour charts and the market condition indicator. All of those things told us that things were changing, and that's really what we want to do, is be aware. Listen to the language of the market. Listen to it talking to you and telling you that something is different than the expectations, and that will go a long way to getting you out of positions when the analysis is no longer supportive of the position that you have on. And I think that's really so important in the lesson in here. Let's take a look here as we switch over to the market condition monitor. Again, Matt did a great job in showing you the conditions in there. Now, if you look here, May 10th, it turned from bullish to very bullish. It was bullish on around May 3rd, turned to very bullish. This was May 13th, May 14th, May 10th. That's when it went around May 3rd or to May 6th, depending on the index, from neutral to bullish, and then it turned to very bullish. And you can see that on the short term. Here, looking at the intermediate term right there, you can see all of them in very bullish condition on the intermediate term there. On the near term, which is looking at swing traders, that are in positions for maybe a couple of days, you can see that the market now getting into a little corrective period right over here with the Dow stronger than the other indexes that have now turned neutral. And for those of you that are day traders right over here, that's the one you'd look at on the intraday, and you can see neutral to bearish right in here, except for the diamonds. Those are still bullish as they are buying the Dow stock. So really important. And I showed you in the very beginning of the show that the day trader or looking at the cockpit or the review of the cockpit for this week really gave you a good sense for these type of indicators and when things in a particular index were negative or positive on the intraday basis. So that's my analysis on the stock market for today. I hope that you thought that very, very interesting and valuable to you. So if you want to learn about askSlim, you can learn from our amazing team of professionals. Go to askSlim.com, look around at our broad education analysis for traders and investors. And don't forget to take advantage of the $99 non-recurring special for level 4, where you get just about everything that we do except for the day trader. That's a separate membership. So $99 non-recurring. Please do sign up for that. And then after that, we're even going to offer you a special to stay with us. So